hello and welcome to the Business and Property Podcast. I'm Stuart.
And I'm Simon.
And we've been finding, buying and growing income from property for over 20 years, and we talk every week about the reality of running property businesses. Quick ask, as always, if you haven't left at least a rating on your podcast player, please do so. It really helps us to get the message out. And certainly at this time of year, we're bringing you the gift of our knowledge and experience. Why don't you give us the gift of your at least rating and ideally review? And you'll get a shout out if you do leave a review on the show. So please do that. So it's in between Christmas. We thought, let's follow up with a little bit of fun. We had a bit of a laugh in episode 165. And it was mostly about predictions. And I'm going to be clear, it was mostly about Simon's predictions. And then my prediction of Simon's predictions, which we'll come on to. And to be really clear, and this carries through for all of our podcasts, nothing that we talk about should ever be constituted as investment advice or advice full stop. It's us talking about what the things that we think about in the property market. And that also obviously includes things like inflation and rates. But we do it for fun. And so we are going to get into that. So Simon made a few predictions last year and we commented on that. And we're going to go through it in the same order that we did last year. So we're going to talk about the Bank of England base rate, mortgage rates and house prices, what Simon thought about those and kind of where we're at. So Simon, shall we start with the Bank of England base rate prediction?
Yeah, I suppose we had better. Yikes. Yes, so last year I boldly predicted that and made the statement that this was a safe prediction that the Bank of England base rate would likely go up to 4.5% or maybe at a stretch 4.75%. And then I thought it would probably hold at that sort of level for most of the year. And then just maybe, if they could squeeze it in, they'd get in a 0.25, so a 0.25% drop at the end of the year, just to try and help people feel better at the end of the year. Well, I'm not entirely sure it worked out quite that way, did it?
It certainly didn't.
So let's have a quick recap of what actually did happen. We started 2023 on a base rate of 3.5%, and it then went up to 4.5% in May. So far so good. We're looking promising, but we've hit that level quite early in the year, and then it all started going wrong because there were then a further 2 base rate increases, so that by August the base rate was 5.25%. So now 0.5% above my prediction. So I think in base rate terms that's quite a long way out. And then of course it stayed there to the end of the year. So there was no little reduction at the end of the year.
Yeah, and we're not going to get into predictions for next year. All I will say on this one, and we can talk about our thoughts for next year, of course, but is that everything we're reading kind of says it's going to stabilise till at least Q4 next year. So that is good news for us as property investors, because I guess for me, the reason Bank of England rate is important is because we know that is heavily linked to the mortgage rates that we're going to be charged. So just the fact that is now stable and we're seeing mortgage rates come down as per our conversations with Simon Glastonbury, that makes us feel a little bit more confident. So if you've got mortgages that are coming to an end in 2024, of which I do, I'm feeling a little bit happier. That's probably a strong word, but at least I'm feeling more comfortable that the rates are going to be around what they're at now and hopefully not much higher. So that brings us neatly on to mortgage rates, Simon. You said what about mortgage rates?
So my prediction on this one was that I expected mortgage rates to roughly hold during the year. So despite the increase in base rate that I was expecting to 4.5%, 4.75% maybe, I thought that mortgage rates would actually still stay at their sort of approximate level at the beginning of the year. albeit with higher fees and things. So given that the Bank of England base rate went higher than expected, I'm not sure I'm going to do very well on this one. Shall we find out?
Yep, let's do it.
So, what actually did happen? So, at the beginning of the year, this is sort of an average across buy-to-let mortgages. So, ones that were available on the market in these months that I'm going to quote. And we haven't got figures right up to December, obviously, because we haven't finished December yet. So we're going to be not quite the whole year. But this is also particularly focused on buy-to-let. Residential mortgages are a bit different. They don't see as higher fees, and the rates are obviously a bit different as well. But for buy-to-let, in January 2023, the average that I could find was 6.28%. And as of November 2023, the average available buy-to-let mortgage rate was 6.22%. So I think that's actually really, really close. And I don't think we're going to see any great shocks in December. Maybe in December it's actually going to go down a little bit more, maybe it's an average. So yeah, I'm actually really quite surprisingly pleased how close I was there.
I don't like to rain on anyone's parade, as you know, Simon.
But you're going to anyway, so go for it.
You know, obviously, there's a great quote, which is, there are lies, damn lies, and statistics. But no, congratulations, you're very close. The question I have on this is, so buy-to-let rates, according to which is, you know, which as in which question mark of the magazine, have they just taken an average then based on buy-to-let? So and this is residential buy-to-let, I assume?
Residential buy-to-let, and it's looking at fixed rates that are available in the market on each year's months. They've also got other figures looking at sort of all current mortgages, and obviously that has a lot of history at this point where the rates have been changing rapidly and stuff. So these are new available rates in the month. Yeah.
So I think we can say, well done, you're 0.06 percentage points out. So you should give yourself a pat on the back for that one. And
Indeed.
You did also make some other predictions when it came to mortgages. And, you know, the first one was around, I mean, you know, again, this is why we laugh about it, because it's quite a broad brush. But you said the government will step in to do something. I mean, based on the previous year, the government stepped in to do everything. So I think that I don't think that was a huge jump. However, I am, dear listener, of course, joking, just to pull on Simon's chain, as I like to do. But the government did step in to do something, Simon. What was that?
Yeah, they did. So I suggested that there'd be some intervention, and there was. I'm not sure that this was quite what I had in mind when I was making this prediction, but they did. In June, the government announced new measures to support mortgage holders, and there's a list of things in there, but some of the sort of key ones that I think probably made a difference to people is that no repossessions would take place until at least 12 months from an initial missed payment. So it would give mortgage holders at least a year before they were at risk of losing their home. And everyone would have the ability to switch to an interest-only mortgage from a repayment. So obviously that could potentially reduce those payments quite significantly. However, one of the big keys to these measures that the government introduced was that they only applied to homeowners, not buy-to-let investors and presumably other investors. Now, I think some of the mortgage companies may have taken it upon themselves to do some of these things to investors as well. But yeah, primarily the government was only really intervening for actual homeowners, not helping out us investors in this particular case. So yeah, I think, while, as I said, not entirely what I had in mind, I think I'm going to claim that one as another
Well,
win.
it's, you know, the government stepped in to support mortgage holders. So, you know, and I, for one, took advantage of that. So on my residential mortgage, we did take a 6-month interest-only period just to help us along. So, you know, I sit under homeowners, but I am an investor, so it kind of indirectly did help me. Although, of course, you would argue that the no repossessions may not have helped. That could have been completely the opposite to helping us as investors. That might have actually caused us more problems.
Yeah, indeed. Although, despite the government introducing this and trying to sort of hold off repossessions and things, they did actually rise in the last year. So for homeowners, repossessions, this data is a little bit out of date again, but it's up to the quarter ending end of September. So it's the most recent quarter available. Homeowner repossessions were up 18% on the previous year, same period previous year. So it's up a little bit, but it's not horrendous. But I think where it's particularly interesting, where investors, buy-to-let investors, obviously didn't have that extra protection, the mortgages that were in arrears for buy-to-let owners was up 100%. So this is not repossessions, but this is in arrears mortgages up 100% for buy-to-let investor mortgages. And I think that the numbers are not enormous in the grand scheme of things, but it's still a big change.
Well,
And
double is double, isn't it?
It's bottling up issues going forwards.
Yeah. Which, again, as investors thinking about this, how is this going to play through into 2024? That's where we're thinking, and are we now seeing the function of all of the issues that we've had in the last couple of years in terms of energy price hikes, Section 24 rate relief removal, and obviously the huge increase in interest rates for people coming off fixed rate mortgages means that if this continues, if this trend continues, there's going to be a lot more property coming back onto the market and continuing the trend that we've spoken about recently in the market becoming more of a buyer's market. But Simon, we've talked about mortgages, and we are now bringing ourselves onto house prices, almost like we've planned it. And you predicted that house prices would drop by a meaty 10%. I don't think we've seen that totally, have we?
Yeah, I might have got this one a little bit wrong. So when I made this prediction, I thought I was being, again, fairly safe in this prediction. There were lots of people saying that there'd be big house price falls in 2023. And I actually went for 10% as being sort of not as big as many people are saying. And I suggested there'd be a sort of gradual decline throughout the year because people would just be feeling poorer and feeling less financially stable. And I think that is the case, sorry, in terms of how people are feeling, and they are feeling like they're less well off these days. However, it has not translated to a big fall in property prices. So the actual figures, again, this data is not perfect because we're recording this in December and not sort of a full year after we actually made the predictions, but we can get some fairly good sort of trends. And there is a bit of a problem with house price data at the moment, in so much as we've got a nationwide report that said in November prices were down 2%. We've got Halifax report that says in November prices were down 1%. So who knows? And then we've got official government statistics that say in September, so a little bit further behind, but in September prices were down 0.1%. So even less, again, of a reduction. However, all of these are sort of looking back a little bit. So there's a little bit of a lag. And if we wanted really the proper numbers, we'd need to look at the land registry numbers from the government. And there's a really big lag on those at the moment. So we might be looking at months out still before we can actually get an absolute number on this. However, I think it's fairly obvious that 0.1%, 1%, and 2% are all a long, long way off my prediction of 10% down.
Yeah, I was going to say you can keep talking about reports and data integrity, but I feel like we're just extending the period of time by which we get to the point of it's not 10%. And
Yeah. Although I am going to throw in a straw that I am clutching at, in so much as inflation has been really high this year,
yeah,
and
yeah,
just
not having
maybe
it, not having it.
just maybe we could bring in 5% or so inflation, which is the most recent figure I could find, and it may not quite be that at the end of the year, but then
And if
if
I
you
was
have
being
five,
really unkind, Simon, I could say, did you mention inflation when you made the prediction?
shh.
No.
So we've got 5% of inflation, plus maybe a 2% if we're looking at the highest falls we can see there. So maybe 7%. It's not that far off from 10. I don't know, but if we move away from what I said, which was clearly wrong, you last year countered my prediction, and you said that you thought that the property market would really be just sort of a muchness, a sort of flat throughout the year, roughly speaking.
Yeah.
And I think, Stuart, you did an awful lot better than me on that prediction. So for someone who at the beginning of the episode last year was really not wanting to make any predictions, that the one main prediction you made last year actually was probably the best prediction we had.
Well, thank you for that. I've been very unkind. I don't deserve this, but yeah, and it's always easy to be right in hindsight, isn't it? And I think my view, and I think my view still is that we all get a bit sort of swept up in headlines and because we are property folk and we talk a lot of property, it's easy to get swept up. And I'm honestly not commenting on what Simon's predictions now. It's more my feeling around the general property sector. Is that it's much better, isn't it, to talk about big drops or big increases than actually the truth is that people aren't really sure what's going on, and that's what I felt at the start. Like people aren't really sure what's going on, and that just kind of leads to a kind of meh in the market. And I still feel that that's the case. Even right now, I feel like people want to talk about recession. And, if people are listening now, I can mention GDP because, if you're listening this far, well done. But, the recent stats that GDP is only increased by 0.3%. I mean, really, what does that mean to us? Not a lot. But then they're saying that now means we can now bring recession back onto the table. And I just kind of feel like, well, that's just because they're running out of things to say. I mean, whether it's 0.1%, 1% or 2% reduction, in the grand scheme of property, in my head, and this is just me and me sharing my opinion, is that means not a lot. Not a lot to anybody. And we talked about this with Simon Glastonbury, that actually, when you expand your view out to more than the month or the year, a 1% or a 2% drop is less than negligible. But it will be interesting to see how this does play through to 2024. And this is not me leading into further predictions, certainly not from me.
No. I mean, just say congratulations on your prediction. So with that winning success, surely you want to start 2024 with some new predictions.
I mean, it's like handing someone a gun and just loading the chamber for them, and that's not my modus operandi. And I'm happy for you to continue to do it, but I don't like this bandwagon. But it is a bit of fun, and we have had fun with it. But we would be very interested for anyone out there that does have predictions. Feel free to reach out to us via biz of property on Twitter. If you want to laugh, cajole, and insult Simon, please do on the same Twitter feed. That is more than welcome from my side. And if you have listened this far, and if we have brought some value or even a smile to your face at this time of year, just drop us a little rating on your podcast player, whether you're listening on Apple Podcasts or you're watching us on YouTube. Hello. Please do just give us a little like and a review, and feel free to subscribe. Other than that, we hope you're having a wonderful Christmas period, and we wish you a prosperous 2024, where we will be back and we're going to be more than ever focused on how we can bring value to you and your property investing journey. Other than that, we shall see you on the next episode.
But without predictions.
Definitely.